welcome everyone to Tavern Talk number 9. This is June, and we're going to just share screen here and go over a few of the things that we've got. So this is a newsletter that I was working on. Apologies again for getting sort of the times mixed up. Maybe next month at some point we'll eventually get this. I think that's my 2023 New Year's resolution, and we'll get the time zones worked out. But in terms of big news this month, we got the Celestial upgrade pack. I mean, it's an airdrop, so I put it as big news. It's not that crazy. I mean, everyone got one. I don't know why these aren't just like bog standard come with the NFT, but there you are. And then we got this Galaxia epic grit airdrop, which isn't actually worth that much money right now. I checked on OpenSea not too long ago about it. I'll just type in again, see what it is. I think it like went down to like basically 1,000, but this could potentially be our biggest airdrop ever, because this is like our first ever epic airdrop. And grit, the main thing about grit is the horse. Oh, I've typed in the wrong thing now. This is a scam one.
Well, it's weapons and horses, right?
Yeah. Yeah, totally. Town Star. Yeah, there you go, there's the authentic one. So, unbelievably, I mean, is that real? How is it only $100? I don't even know, guys. When we first got dropped it, I was asking if you guys wanted to sell it. I think one of you guys, I don't know who it was, came in and said that it could potentially be worth more because this is like the main thing you do. I've got no idea why there's so many. Maybe this is like the best buy yet. I mean, this thing isn't even in the GALA store yet, but do you think it's really going to be 2,200 GALA for a horse? I mean, it might be, but this is an epic one, so yeah, it's only worth $100, guys, right now, which is kind of tragic. It was worth like 0.4 ETH when we got it, but again, just like when we got this Celestial, they landed originally. We just held on to it until it's sort of worth more. I guess we don't really care about $100, so I guess we'll just be holding on to this one as well now until the price is substantially better. But yeah, that's quite cool. Q2 earnings so far, 86,189 GALA. So with today's prices, 5 cents, you're talking about $4,500. I'll just zoom in, guys. Apologies, just in case you guys can see that a bit better. We completed the Mirandus playtest as well. So we'll be expecting another Materium airdrop on the Jukers account. We've already got 60 Materium. We'll probably get another 100. And then this is the big thing that we need to talk about today, guys. And there's going to be quite a lot of discussion in the tavern about you know, John's offer and sort of what it'll look like after, if in the event that we don't have the Town of the Duke in, you know, and the valuation, what is our town going to be worth essentially? Basically just the nodes, you know, the NFTs that we've got, everything except the big landed that basically this whole project is based around. So what is that offer then? Basically, I haven't actually written it down in here, and I'm not sure, Ed, if I will email it out to the guys. I mean, this is just everyone who's here, we're getting it emailed out to us, but I don't know if it's officially considered a formal offer, but basically what we have been offered is 250,000
divided by what? 50, 40 something? 47?
Yeah, technically yes. We basically get $250,000, right? And then however many units you own, so divided by 54. So for each of you guys, for each one unit you've got, that would equate to $4,600 worth of equity in the Slingshot DAO. And we have got the private sale price, so it's the lowest price that it's being sold at or has been sold at, and only, you know, select private investors who are here prior to the official launch, you know, will be able to get that price of the token. Once the Slingshot DAO is like fully launched, whenever that'll be, next month or the month after, the ICO price, I'm assuming, maybe Ed can say a thing or two on that, but I think it'll be a good bit higher than the private sale price. That would make sense. And then obviously once it's, once the token's out there and it's in the wild, however high it goes is determined by the markets, or low,
Yeah, it'll be an initial DEX offering. So I think the public launch will be through SushiSwap. No official word on what the final private pre-sale price will be, but it's sort of saying like the token amount will be equivalent to 250K USD based on that final price that's agreed to with the institutional investors behind this. And then the IDO price will be higher. I don't know exactly how much, but it'll be higher.
Okay, well that makes sense. So just for talking's sake, as far as the way I understand it, that would be like, let's say, the private sale locked in at $1 per token, and then once the IDO, the initial DEX offering, goes public on SushiSwap or wherever you said it was going to be, then that'll be, let's say, $2, just for talking's sakes. So that means the private sale, people who came in prior to the actual white paper, prior to the launch, got basically half price. It's something like that. I mean, it's not obviously going to be those exact numbers, but that's kind of like, it's not going to be less.
That's the idea. And I think, market conditions are rough right now. So definitely can't predict, where things will go, what's in the hands of the public. But as a long-term play, I think there's a ton of upside there. So it could be, big brain play. It could be something that doesn't work out. But I think the idea here is basically we can choose to exchange just the town itself for these DAO tokens. We keep the rest of the assets that we own, the nodes, the buildings, etc. And then there would be an agreement to where we can be like the exclusive operator of the town for a period of time once the game launches, and potentially could renew that agreement indefinitely as long as the community is supportive. So like, in a way, we could have our cake and eat it too. But there's a lot of variables there. It's not a formal offer in the sense that it's not like written down. There's no like term sheet in hand, but it's an agreement that like John from GUIB stands behind, and we'll write it out if we want to move forward.
On the private equity, how long do we have to hold the token? Is there a minimum?
I don't know what John wants to do about that, but my expectation is that the lockup will be the same as what the institutional investors get, which is generally, I think, going to be like a 1-year cliff followed by a 1 or 2 year sort of like graded like monthly unlock from there.
Release every month. Okay. All right. Thanks.
So that would basically like nothing unlocks for the first year, and then after the first year, every month 1/12 of the tokens will be released to each of the private investors. Okay, awesome. So yeah, and I also agree with you on the fact that it's kind of like hedging your bets anyway, because if we do sell the town, and even if the GYB Slingshot DAO doesn't seem to work out in the short term, we've still got our revenue sharing agreement, which is the next big part of this offer, and that's been locked in at 75%, or at least that's the offer on the table right now, which I think is pretty cool. So yeah, that would basically mean if we earned £100,000 playing Mirandus with the Town of the Duke, we would take 75,000 dollars of that. Pounds, dollars. Yeah.
Same thing. But yeah, that would all get distributed to the shareholders. And one thing to note is that in this proposal, like, there's no element of like buying out GYB shares. We could still do that, or make an offer to do that if we want. But this is just shares stay as they are. 250K for the town. Yeah.
So that's 4, 6, 2, 9 each. worth of equity and worth of the DAO tokens, and then we've got a 75% revenue share. Basically, that we'll be able to earn from the town, and I think that's for 1 year post launch of Mirandus as well. So if Mirandus comes out in July 2025, then this agreement will still be standing, and we'll be able to play it for the first year since launch. That's the earning side of Mirandus though. Like even if it's not like out fully, but it's in beta, but we can still like play to earn on it, then that'll start the timer as well. And it's for a year, if I think that's right, isn't it? Yeah, 1 year post launch. 75% revenue share, 1 year post P2E launch. Mirandus. So what's next then? We've got to await and review the information on the Slingshot now. So this has been postponed to like July at some point. But basically, like the white paper, any of the other information, regarding like the management, who else is involved in it, what the voting's going to be like, or the tokenomics, like the max supply of the GYB Slingshot DAO tokens, and how many tokens we'll roughly get, the exact private sale price, if we can even know that information at this point. That would all be really, really, really important to sort of gauge how much of this thing are we actually getting. And I like the DAO, but I just want to know exactly what it is that we're getting involved with here. And then after that, guys, we're going to have a vote. So this is the vote that we've basically spoke about for over a month now, and it's just simply, do we want to accept John's offer? And if we do, then we'll vote on it, and we'll merge. We'll give John the town of the Arch Duke, and we'll get our tokens. And
one thing I want to be clear on there is it's not an actual merger, it's an asset sale. We're selling one of our assets to the DAO.
Correct.
The Dukers would still be a separate entity, and like what we could do is we could form as a guild, sort of formalize that independently of GYB, independently of the DAO, and then like we as a guild would be the ones as like the counterparties on the contract to actually operate the town. And we could also like offer our services to other asset owners, do whatever we want as part of the guild. We could sell membership NFTs, like whatever the heck we want to do. Like, but we would still be a separate entity.
Yeah.
Okay. So that's good, and that means that essentially the only thing that's left to do, guys, and this is kind of really what we need to discuss today. This is kind of why we're all here. Is we need to haggle, guys, right? John's came forward, he said, I'll give you $250,000, you can have 75% of the revenue, and that might be his best offer. Maybe even said to Eddie, look, this is my best offer of what I want to do. But, just like any normal business practice, you're going to try and negotiate better terms. So, I don't want to be like greedy or anything like that, or piggish, to use one of John's terms of phrase, but we are GYB piggies, so it's kind of to be expected, I think, and I would say we can at least push 10% extra on them. But what do you guys think? Do you think that would be cheeky, or could we push John to give us a little bit more? I think that might be okay.
I'm looking at the market conditions, and knowing John, he'll just say, look at the market conditions today, and unfortunately, they're not in our favor. So, that's kind of how I'm looking at it. I don't think 10% is going to make a difference. That would be another like $400 more per person.
Yeah.
To bump us up to $5,000. But I don't think in the long term that it makes a difference. But
okay, fair enough then.
Excuse me. So then, too, just to be clear on the DAO, there's, and I know you said we'll get more information on this coming up. There's other assets wrapped into the DAO project. This DAO isn't solely based around the Mirandus town and its revenues, correct?
Absolutely not. Absolutely not.
Yeah,
There's many things that Eddie would be better to speak to. Obviously, we don't have like the white paper, but that's partly all the information that should be laid out in front of us. But I think, just to give you a ballpark figure, the town of the Arch Duke, even valued at $250,000, wouldn't even make a 1% dent in the size of this DAO from the way I understand it.
Gotcha.
Yeah,
So
and you weren't in a couple of the other meetings, but John talked about they have a lot of sponsorships and a lot of collaborations, and one of them is with Animoca brands. So, and also John said his own portion of the DAO that he's buying into is going to be locked up for 10 years.
Okay.
So that's how much faith he has in his token.
So additionally, one quick thing is so the only thing we'd be giving up right now is the town. We maintain the nodes and everything else, and if the nodes kick off, and GALA goes up in price, there's always the opportunity for us to go out and buy another piece of property.
Yep.
Right.
Yep.
Absolutely, yeah.
So as long as my main concern is maintaining the real value in this whole GALA is the nodes. While the town of the Arch Duke is nice and very, very profitable for us, or has been, I think that in the long term, it's going to be the nodes is where we hold our big value. Because you can just imagine if GALA goes up to $1 or $2 a token and we're generating however many we are every month, it could be a very good thing. So.
Yeah, well, Colonel Rhino, to be quite honest with you, GALA games have just, the node sales have slowed down to a halt. There's going to be a halving every year, so the nodes every year will earn half the amount of tokens. And also, they've mentioned, there's been whispers about actually giving the GALA founders nodes out as NFTs. So, that being the core thing, that kind of is like the engine, to be honest. You're right about that. That's kind of like our engine that makes us money and allows us to buy things. But at the end of the day, what are these things actually worth? Are they going to continue to go up in value? Because remember about the halving. I mean, this isn't like the Bitcoin halving. I don't really personally see GALA doubling in price just because founders node owners are only getting half as much. Most of the GALA that's earned probably after the halving will be bought on exchanges or bought in the store for maybe Ethereum or something. I don't know how it'll work, but
no, I'm curious to see what I know obviously last year they basically delayed the halving a year or two. In essence, as they said, keep enthusiasm around purchasing nodes, which I get. I'm also curious what there's, it's going to be extremely hard to sell a node for $100,000+ when the rewards just completely halved. So I'm curious, with the price increases at the time too, they had also had a final price of $32,000 in the final 100 nodes. With the price increases that they implemented, I think that went up to $262,000.
Yeah.
Obviously done in a bull market. So I'm curious to see where we're at that cycle again. We're at the July cycle again, where we were in a bear market previous. I'm not saying it's going to be a hard sell to finish off those 50,000.
Yeah, but that's actually another thing. They said that they're thinking about just taking them off, not allowing them to be sold, and then they'll keep them. And they already own 17,000 nodes. I don't know if you guys heard about the dark nodes.
Yep.
Yeah. And now, if they take the remaining 7,000 nodes, that would allow GALA games to have just over 25,000 nodes under their direct control, which is obviously more than half of them. So you can see how that would be good for decentralization. But really, it's quite interesting. I think the main thing that we need to look at is how is this going to look like if we did sell John the Town of the Arch Duke, right? Because John's offering under store price. Store price is like 300,000. John's offering 250,000. During this market, is that really good? Well, it's better than the last Town of the Arch Duke that sold for 50 ETH on OpenSea. So that's a big improvement. But it's also lower than the store price. So I feel like there's no harm in negotiating. I mean, but okay, let's say we sold the Town of the Arch Duke, right? What does that leave us with? Leaves us with a couple of random NFTs, a cemetery, which is our most notable one, and 3 founders nodes. So when the founders nodes go in the second-hand market, we'll know what they're worth. Let's say they're worth $30,000. Eddie said maybe a 5-year ROI seems good. I was thinking maybe 10, but that might be too slow for most people. So if you can,
I think in the crypto market, it's probably 3 to 5 years.
Yeah,
I think. Unless people are pricing in expectations that the price of GALA will rise considerably, but people have short attention spans in this space.
But people are also banking that as new games come on, part of their tokens are going to be rewarded to those founding nodes, and I think that's what they're looking at in the long run.
Yeah, I agree, but it's like if Townstar is precedent, like it really is just like a trickle.
Yeah, true.
I'm
Yeah,
not trying to talk
yeah,
down the value of the nodes. Like I love my node and value. I just think if I were to venture a guess, like if you were to put licenses in the hands of everyone and let people just sort of like go at it on the open market, like I think the node value right now would probably be 20K, 25K, somewhere around there.
I just crunched the numbers for us, guys, right? After the halving, which is happening this month, unless GALA Games delays it again, and they can only delay it one more time, and it's not really delaying it, it's just a vote to allocate more of the daily distribution towards Founders Node owners. Currently 50% of the GALA contract that gets minted every day, 50% of that goes to Founders Node owners. It was 25% before the halving last year, and that's why we haven't noticed the nodes paying out less. But I'm assuming they won't do that again this year because they're still going to want to take most of the GALA for development of the GALA blockchain and games and whatever else they're doing. And then that means we're just going to be left holding the bags, getting half the amount for our founders nodes. So given current prices and given half the amount of GALA, so roughly 150 GALA per day, that would give you 54,000 GALA a year, which at the current price of 5 cents each would be $2,700 a year, which over 5 years would be $13,600. So if Eddie is right in saying that people would be looking for like 3 to 5 years, then optimistically, given the current price of GALA, nodes might be selling on the second-hand market for like $13,000.
Yeah, you're right.
So if that is the case, guys, that's bad in a way, like for obviously all of us that have founders nodes, because we might have wanted to sell them for like $30,000 or whatever we thought they were going to go up to. But it is what it is. It's still quite a lot of money. It might even go a little bit less than that, and it might be a good opportunity for the Dukers to buy another one, because we've got like $5,000 sitting, and that's also good for our project evaluation, because if we are going to buy out John and it's just going to be 30, there's 54 minus 17. So there's going to be 37 seats at the table if we bought out John's interest in the project. Obviously, without the turn of the Arch Duke there, if that was sold to the GYB DAO, our project evaluation, which is basically 3 nodes plus a cemetery, based on the numbers that I just told you guys, you'd be talking about $43,000, which divided by 54 times 17. John's interest would be valued at that point at $12,000, which is roughly the price of a founders node. So we could technically, just using Q2 and maybe Q3's GALA alone, even at the current prices, potentially buy out all of John's interest, which would mean the remaining assets, that's all the founders nodes and all the NFTs, could be bought out of John for just through our own earnings that we've earned. We wouldn't even have to put in any more money or bring in any new investors, which I think is quite exciting as well. But we could also negotiate as well with John, maybe. I don't know, guys.
Yeah.
I want to add that part of the value of the shares is also the revenue stream, the long-term revenue stream from the play to earn rewards. So that would have to be factored in. And the only other thing I would say is if I just only have my Town of the Duke Duker hat on, I would say I kind of would want to keep GYB involved, like have their shares. I don't even know whether John wants to, but the reason I say that is because I am concerned about the ability for DAOs very generally across the space to honor contracts. I don't know if you guys paid attention to the drama between YGG and Merit Circle. Is anyone familiar with that?
I've never even heard of Merit Circle, sorry.
Merit Circle they might even be the largest play to earn guild now. Merit Circle and YGG are like the 2 big ones, yield guild games. Both had $1 billion plus token valuations. But YGG was actually like an early investor in Merit Circle. And that investment did a 30x. But Merit Circle's DAO members decided that YGG didn't do enough as an investor and early supporter to actually like justify continuing to distribute the shares that they paid for, and just sort of voted not to honor the agreement. And like basically didn't give the YGG shareholders like what they had paid for.
So they don't get their distributions anymore.
Yeah, basically, like rather than getting a 30x return on their investment, they're getting like basically what they had already been paid out. And it's just, I would encourage everyone to read about it if you have it. I'm sort of like raising concerns about this, slingshot DAO that I don't, I still believe in it, but it's like,
that seems like one thing that shouldn't be decentralized, where you could like vote to break the terms of service. That just seems stupid.
How can a DAO just like break contracts? I don't understand that. Like, and it's not like there's settled law in courts that like govern this, but it just seems like there's no way that can work long term. But it's something I'm concerned about in the short term. And so I think having GYB as shareholders who are entitled to part of the revenue from the play to earn stuff in Mirandus helps keep our incentives aligned, because GYB will be a massive shareholder in the DAO. And so like if they throw their weight behind continuing to have this group sort of be the play to earn operators of the town, it gives us extra security.
Yeah, absolutely. And you're kind of like on point there with like Dragon's Den, Shark Tank. People sacrifice 20-30% of their business just to have these big players in the game. So GYB having an interest in the Town of the Duke, even if John said, the only reason we're talking about this, guys, is because John said when he was in a private call with us about the Slingshot DAO, he says that maybe we can buy out his interest in the Town of the Arch Duke project. So that's kind of really what spurred all this thing on. But this is like after, we've like voted about, are we going to join the DAO? Are we going to like give the Town of the Archduke over? Yes or no? And after we've decided all that, this is just kind of like the next thing. So it's just fun to think about. But yeah, I mean, that's actually a good point for keeping GYB in. Maybe even if John wants to spare himself the headache of, showing up to the Tavern Talks or whatever it is that he thinks he's required to do, then yeah, we're not going to offer him anything, so he's staying whether he likes it or not.
Right, like you can renounce your shares or sell them at a steep discount, but otherwise you're stuck with us.
True. Well, yeah, guys, that's really all there is for today. Then, should we negotiate higher with John then, or do you want to just lock that in then? Because that's kind of like locked in. Are you guys happy with $250,000 for the Town of the Archduke on its own, plus a 1-year agreement to profit share with the when Mirandus is live? It's up to you guys. Like, I'm not even bothered. Like, to be honest, I like the Slingshot DAO. $250,000, divided by however many units you own. I think that's okay as well, to be honest. I'd be quite happy with that, and it would give us a really nice chunk of money in the Slingshot DAO. So if everyone's happy to go ahead with that, we can just lock that in.
So what happens after the first year? Is it just where they have a chance to renew us if they like the job that we've done? Or is it just, it's a year and done?
So we can basically come up with whatever terms we would like in terms of how it's going to be set up. I think we need to be thoughtful about how to specify when the 1 year starts, because it's like if the game launches publicly but there's no play to earn for a year, that doesn't really qualify. It needs to be like a significant launch of play to earn functionality tied in with like some sort of public availability of the game. And then I think we can sort of specify that like it auto renews, but there is some time window where they can terminate the agreement each year optionally. But otherwise, like if they don't say anything, then we just keep going. And I would say like, annual renewals, meaning like if they don't let us know within the termination window that they're terminating the agreement, then we're set for another year. I would probably set up something like that. But yeah, it's basically 1 year guaranteed, and then
A 30
option to
a 30-day termination period,
Yeah.
or auto renew kind of
Yeah.
thing.
that's what I would recommend.
Yeah, it could maybe be like car insurance, where like our auto renew quote is like a little bit more, and if they don't respond to it, then and that's the new thing for the.
So they got us at 75%. Is that right from that
Yeah,
revenue
75.
share for the year?
Yeah,
You know, that to me that seems pretty generous and pretty
It's-
high.
Yeah, that's
Pretty
good.
generous,
I like
too.
it.
It does, and there's
What-
you got to always ask why.
Yeah, what I would propose is something a little different from that aspect, and just to see if they say, so first year 75, and then every year that they do us after that, we reduce it by 5 or 10% until we get to 50 or something like that, and then we go into, the renewal process, from that aspect. Keep us if you like us after that, something like that, where as the game progresses, it should be making a lot more money, and I can see where 75% is a pretty big chunk that I would be very inclined to cut us off after the first year.
I would say I wouldn't put that into the agreement, but it's like if it becomes too high and the industry standard settles lower at 60, 65, 70, whatever the case may be, we can always opt to sort of change the agreement later. But I think YGG's model is 70-30 split. So asset owners get 30%, operators get 70. So we're taking a little bit above that, but it's not egregiously above. And like we can do research on other, agreements like that to sort of better establish the standard and see if we want to change it. But it's like we're basically making this agreement with John, so we can basically ask for like anything we want year one. But we do need to be cognizant of the fact that like long term, it's going to be up to a huge community of people. So the best thing that we can do is really just sort of like stay off everyone's radar, like just sort of quietly operate in the background, make sure the DAO is getting their money and give them no reason to worry about us or what we're doing, and just sort of stay in the shadows. I think that's the way to approach it.
I like what Colonel Reno said though, because like true, if we did somehow lock something like that, and that would maybe incentivize them to keep us on for a longer period of time. Because if we just do it for a year, then it's like, okay, thank goodness the year's up. Let's see if we can get a cheaper deal. Kind of like any normal person you would think. But again, if the town of the Archduke's only 1% or less of the DAO, then it probably isn't that big a deal for them. And a percent of 1% is like probably not that big a deal for the DAO overall. But 75% is great in my opinion. I don't know where 70% is the industry standard. I mean, looking at like Splinterlands, which is kind of like the other project I'm looking at, players get like 50%. That's kind of like what YGG, scholars at Splinterlands accounts for. So if you want to play Splinterlands without any assets, YGG will set you up with a scholar account, but they'll want a 50% cut. That's the owners, so 50% to the owners. So John taking 25% as the owner. If he's the owner, then that to me is really cool. And also, if it did go down to 60 or whatever it is over like a course of years, yes, get the benefit of potentially encouraging the owners to keep us on for longer, but it's also got the other benefit that if Mirandus is not successful, then it won't really matter that much to us as well, because that's always a thing that is not usually thought about, but it's something that maybe the bear market's made me think about, is what happens if Mirandus isn't as big a deal as we all want it to be, because that's a realistic thing as well. But yeah. Well, guys, that kind of like wraps us up for tonight. What do you guys think? Should we go back to John and try and push for more then? Do you want to talk about a 5-year lease with a 5% decrease every year? Do you want to even propose that to him? See what he says. Do you want to propose asking for $275,000, 10% more? I mean, I know it's only $400 each, but some people have got more than one unit. So Eddie's get, I don't know, 10 or more units. So for him, that's you're talking thousands and thousands of dollars, getting an extra 10%. So for some of us, 10% more is quite a lot.
No, for sure. And for me, it's kind of tough to say. I know the town of the Dukes can be a small portion of the DAO, like you said, but at the same time, the value of our Town of the Duke is then fully relying on the DAO. So without knowing what else is in the DAO, it's kind of hard for me to say what do we think the Town of the Duke is. Me personally, I'm wired to accumulate assets in bear markets, not sell them. That's where my natural mind goes. It's probably where John's goes as well, which is why he's here asking to buy ours. So that's where it's like I'd have to see, what I don't know how you put a value on what our contribution to the DAO is without knowing what else is in the DAO. Because if the Town of the Duke only contributes to 1% of its success, then we are fully reliant on everything outside of the Town of the Duke and GALA games, which is what brought us here. I'm not against it, but it's just, to me, it's like I don't even know how you can answer that question without knowing what is in that DAO.
Yeah, you're totally right, man. That's kind of why we've not voted on it yet. I've not even put a vote out. And we've been talking all night, like, guys, I'm excited about Slingshot DAO, right? But at the end of the day, we don't even have to go into it. And John's not even bothered. It's not like we're being, like, forced into, voting one way or another. John's, he's not going to be voting on the actual vote itself. He's letting the rest of us decide, do we want to join his Slingshot DAO? And we might not join it, guys. Maybe we are going to be the owners of the Town of the Duke, and that would be, sweet as well. Mirandus might be 5 years away, and we might just be, sitting here for month after month for the next, few years. But at the end of the day, guys, whatever happens, like, we'll make as much success of it as we can. I'm sure, either way it'll work out great. But if he's only asking 25%, and we're getting all these DAO tokens that Eddie has been working on, and he knows more than the rest of us, and if he's willing to sacrifice his diversity to put it all into the Slingshot DAO, that's kind of what's making me think that it seems like it would probably be a good idea. But we really do need all the stuff to look at. How much percentage of the Slingshot DAO is the Town of the Arch Duke? Because if it's like 15%, then that's actually more risky for us. Whereas if it's 1%, then that's fine, because we're just like small fish.
The way I would think about this is there's basically two stages. One is we need to try to come up with a value for the town if we were to sell it. And I would think about that in USD terms, whether it's 250K or something else. I would think about what number you want to counter with and what number is like the bare minimum. Like, if we can't get 275K, then we won't sell, or 300K, or rather maybe it's 250. Like what your bare minimum is, what your counter is going to be. I think you have to counter. Like, absolute worst thing you can say is no, so just counter anyway. You won't have all the information about the DAO at that point, but really all you're trying to get to is like a sort of like a verbal agreement on price and value. And then you go into the diligence phase where it's like, okay, now you can look under the hood, you can learn everything there is to know about the DAO, all the assets going into the treasury, who the other like institutional investors will be. And then there will be like a decision time where it's like, okay, we've seen everything. We know what the terms are. Yes or no, do we want to go through with the transaction or no? And that's the same way it's going to be with basically every other asset sale or asset contributor into the DAO. So it's like there's basically two stages of gating. One is just, do we want to move forward, learn more, and sort of have a verbal agreement on terms? And then there's the final, like, do we want to execute the transaction?
Okay, I've actually had an idea though. That's made me think. What about this then? Instead of like try to like talk about it here, what do you think of like a vote, guys? What if I put it on like the voting channel, said, what would you think the Town of the Duke is worth? Here's the store price. Here's the market sales history. Here's the average price it's sold over its lifespan. Do you think it's worth store price, below store price, market price, or above market price? And then that'll kind of give us an idea of where the majority of people are sitting. And obviously you can see who voted where, and obviously where the majority is. And then that will help us, decide what the counter offer is. And I can put values on it as well. And, that can make people decide, okay, well, obviously it would maybe require letting on some information. Like, I don't know if I can say, like, John's putting in John's wanting to buy for 250,000, because it's not kind of like official yet. So I guess we should just kind of like discreetly sort of
Yeah, it's
You're muted, Eddie.
I said, yep, no, and everything you guys are saying definitely makes sense. I still see two different values. We're talking, like I agree with what we definitely have to figure out a way to identify it. We're trying to identify it almost in a USD value, and this is, for this sale, we're not getting paid in USD.
True.
What we're getting paid in, the value and what we're getting paid in is fully backed by the DAO, and we can't touch it for a year. So the IDO value of it is irrelevant for us. In essence, like I look at it as from an aspect of what's the liquidity risk over what time, and what is my risk tied to? It's no longer tied to the USD value of that asset. It's tied to the overall value of the DAO.
Absolutely. I mean, that's
so I totally agree. Like, yes, we have to figure we have to have some sort of USD value in mind of this property. So when offers like this kind of come along, we have a basis to understand of what we as a group would expect. That's just my 2 cents. I see two completely different values there. Okay. If it was one thing if John was saying, hey, I'll offer you 250 USD and the option to buy in at the white paper price into the DAO, that's a completely different offer. Okay, but when the value comes fully in a locked 1 year DAO token, then the USD value, in essence, at the time of the sale, has no potential. I shouldn't say it. It has relevance, but the relevance fully comes from the success of the DAO.
Yeah, you're right, man. It's kind of like a mortgage, guys. When you go into the bank, you have to pay a lot of money to get a 10-year locked rate, because as you take the timeline out further, I mean, a year and a half in the NFT space is kind of that's like eons, really. So,
For sure. And it's like taking a mortgage not on a single residence, it's taking a mortgage on an entire neighborhood and saying the home of your value is completely tied to the average sale price of this entire subdivision. So it's it's just in that relation, it's like, okay, in essence, in my mind, it's in a way de-risks, but in a way adds risk, because if a bear market were to come around again and we had an opportunity to sell the town of the Duke at in a bull market pricing, that's an instant sale for USD, or ETH converted to USD, and then from there that's an instant addition to the balance sheet. This is a kind of an escrowed addition to the balance sheet that is fully tied to the DAO's performance.
Absolutely. It's quite a deep thought, actually. I can tell that you're a financial advisor, because that's good thinking, man. I don't even know if John thought of that. He knew about the lockup, but I think if he understands our position more clearly, like how we are basically locked up for a year and a half to get these tokens, it makes sense that we should obviously be a little bit more, get a better price just based on that. So if John was just thinking like, okay, off the top of my head, I want to be 250 for it, that seems like a number I'd like, then we could say, hey John, look at this, we're going to have to lock up our tokens for a year to 2 years to get everything out. So based on our position, based on the fact that in any trade, buying something that's coming to you 2 years down the line, it's not very good. Like if I was to offer you $1 million in 50 years, you probably wouldn't like it, because by that point, even just inflation alone will have probably spiked that down to like £100,000 worth of purchasing power. So yeah, a year and a half in the crypto space, it is gargantuan. So I think we can push harder, guys, and we really just want to get the best deal possible. If GYB's DAO pops off, we'll be happy either way. If it doesn't, and we've got our Mirandus stuff, and Mirandus pops off, then we'll be happy. There's pretty much almost, we'd have to get it's like a 25% chance that we'd get the unluckiest sequence of events where everything just seems to go wrong, and then we just feel like the project was failed. But I'm kind of thinking this is a good way to hedge our bets. But I'll put up a vote, right, on the Town of the Duke voting. We'll see what people like. I'll explain a lockup, because I can at least say that, right? I can at least say, guys, if we were to sell the Town of the Arch Duke, we would have to lock up our funds for 2 years to get everything, essentially. So how much USD would you like in 2 years? You know, so that'll hopefully allow people to think in their heads, well, let's factor in, you know, where's crypto going to be in 2 years? Where am I going to be in 2 years? And then that way.
How are you getting from 1 year to 2 years? I'm trying to figure this out.
Well, it's a year you can't get anything, and then after 1 year you'll get 10% of the tokens.
Oh, okay, got it.
Or,
got it.
well,
Okay. Now I understand how you got to 2 years.
sorry.
That's fine. Yeah, that's fine.
Yeah. So basically, if you say, hey, where's my 4,600 GYP DAO tokens, then you won't have that full amount of, you know, DAO tokens until 2 years after the start of the ICO or the IDO, I would imagine.
Yeah, but explain it as they unlock 1/12 each month so that they understand that.
Yeah, it may be that, or it may be 1/306. Okay, yeah, I'll explain that. Yeah, true. Okay,
Yeah,
fine.
because that makes it correct. It's not 2 years. It's every unlock every 12% every 12% every month.
Okay. Yep, I can do that. So
Yeah.
I'll try and explain it as best I can. I'll finish off this newsletter, guys, as well. So if you like to read the monthly newsletter, I'll be sending that out in the next hour or two, and then I'll get on with the voting. And thank you all for coming.
You.
It was nice meeting you for the first time as well, Dadio. Hope to see you back next month.
Absolutely,
And,
glad to be here. Nice to meet you guys.
Yeah, guys. Okay. Have a good night.
All right.
Okay, thanks. Appreciate it. Bye.
Better.